Okay, good day, audience. This is Mustafa Mirchawala, your TX trainer. And the objective of today's class is basically to give motivation to you guys because these are last days and we'll be solving last 40 marks, which is available on accaglobal.com, the latest past paper of March, June 2021. March, June 2021, latest past paper we will be solving, right? Okay, now keep few things in mind. I always say in my class even that this paper requires a lot of revision, recalling. This paper, the voice is perfect, the voice is perfect. Yes, the voice is perfect. So I always say in my class, often say in my class that this paper requires a lot of recalling, recapping, that because a lot of things you need to memorize. There are small things. Okay, so it's better you maintain exam folder and exam folder. Can you hear me? Can you guys hear me properly, please? Write on the comment box. Yes. So better you make exam folder summaries for each and every chapter and write and just compile it. Okay, so in the end you can revise whenever you want to revise, you may revise. Okay, second thing you should do is solve maximum past papers and maximum exam kit. By past papers I mean exam kit. Okay, never ever solve F6 and T6 TX and ATX past paper from internet ACCAglobal.com. 99% past papers are old and they are from old fiscal years. So you should do your exam kit. In your exam kit, all past papers are amended. Okay, then what you should do is you should solve mock exams in the end. Must solve mock exam, right? So what students do, they just practice doing separate questions. They do one question and then they go out for tea or TV or something, then they come, then they solve one more question, then they go out. This is not the way. At least in the ending days you should solve 2 to 3 complete past papers, using timer. And you should not leave that room, for next 3 hours. Okay, right? In this way you will be used to with how to solve it, right? Okay, so must solve the mock exams. One more thing, must read all the examiner reports. In the examiner reports you will come to know what are the famous mistakes students do, what are the routine mistakes they do, so that you don't do those mistakes again. One more thing, first 60 marks first 60 marks examiner never tell you, they never disclose the first 60 marks on accaglobal.com, right? Okay, so but in examiner report they give you some hint regarding first 60 marks, and also they give you some few MCQs as well. So it's highly recommended. Even I have a broadcast list of my registered student. I send every time, in every attempt I send the examiner report and I guide them to read. Okay, this time I also send. So if somebody doesn't have this, so take it from accaglobal.com. It's available. So must read examiner report. Now one more thing, there are students, it is written in the examiner report, there are students who solve past papers on using paper and pen. There are students who solve past papers using paper and pen. Last 40 marks, I'm talking about last 40 marks. Listen, if you solve using paper and pen and in the examiner you have to solve on software, so you will be stuck, you will have problems. So it's better you start solving questions on the ACCA platform, the platform given on the accaglobal.com, that constructed response area CRA, constructed response area, last 40 marks. Okay, in the exam environment, these all are the things which are very important for you to clear. Okay, and one more thing, when anybody of you solve exam kit for the first time, yes, you do mistake, you have to see from the back. This is routine, so no need to demotivate. Okay, and yes, students do some famous mistakes also. There are many small things. Sometimes they forget to prorate things. Like many things are like in capital losses chapter, you know, the 18% WDA and other WDAs are for 12 months accounting period. So if your accounting period is less than 12 months, so you need to prorate, you need to apportion 6 upon 12, 7 upon 12. So there are many things like that. There are many things like that which we forgot. There are many things like that which we normally forget to include. So yes, it's a routine, it's a routine, it's a routine. It happens. Okay, now let's start with the past paper. I'm going to solve that this past paper on Excel, but right now I'm using my iPad to discuss the question because I need my pen to discuss the question. So please concentrate here. You will understand each and everything. Now the scenario relates to one requirement. This is the first question. And this question is related to the planning area. This question is related to the planning area. There is a planning area, and even examiner has written and uploaded an article with the name of advanced skills. And I think the name is advanced skills. And this is the second article of F6 on ACCAglobal.com technical article. Must read that article. And this is the question in which normally the feedback is in this question. Normally students do mistake. In this question, right? Okay. So let's discuss in this 10-mark question. You need to make plan that whether it is good to run your business as a limited company or run your business as a sole trader individual. Okay, so you have different options. For to execute your business. Okay, so obviously as we are studying the taxation paper, so we should go with the option that cost us less tax. Okay, the objective is tax saving. Okay, let's start. You should assume that today's date is 15th March 2020. Today's date is 15th March 2020. Paul is the managing director and 100% shareholder of Palu Limited. Okay, so this is limited company, and Paul is the director. He is the director. Director is also employee of the company. He's the employee plus 100% shareholders plus 100% owner as well. Okay, so you better know this thing. When you are an employee means director, plus you are also the shareholder of that company. So you can take salary. As well. As a director, you can take salary as well. And as a shareholder, you can withdraw money from the limited company in the form of dividends, in the form of ordinary dividends, right? Okay, so you will see both things. Now, the first case, when you withdraw funds from company as an employee, so definitely that will be a salary for employee, salary from company point of view, that company is giving you salary. So don't forget, when you are director means employee and company is your employer. Director means employee and company is your employer. So in that case, whatever salary company giving to you, is allowed expense for that limited company, Okay, now one thing I would like to tell you, listen, all of you, please join a WhatsApp group. Our admin has sent a WhatsApp group link. In the chat box. You all are requested to join that WhatsApp group because I'll send you few things after the class as well. Okay, a few important things for you guys after the class. Okay, now, and we'll be in touch. Now, the point is, so let's read. For the year ended 5th April 2021, Palu Limited's tax adjusted trading profit before taking account of directors remuneration is forecast to be 175,000. That means limited company's profit is 175,000. Okay, this is the trading profit of the company, 175. Now look at here, how much how much Paul intends to extract Palu Limited profits after allowing for corporation tax. This will be achieved by paying himself a gross director's remuneration of 8,000. Yes, he will be extracting salary and dividends of 135,270. Now you will think why the dividend number is not a whole number straight with 000. It's 1325270. Let me tell you, dividends are always distributed from profit after tax. Dividends are always distributed from profit after tax. Profit after tax. Now hold, listen. Just this is the rough working I'm doing. I'll solve this in Excel as well. Okay, so you need to deduct the salary. You need to deduct the salary. Salary is allowed expense. When company is giving salary to employee, it's allowed expense 8,000. Now this is your final TTP. This is your final total taxable profit. 175 minus 8 is, I think, 167,000. Now hold, wait. You may ask one question, sir. When company is giving salary to this Paul, that means company is employer. So we have studied in our classes that there is a class 1 employer NIC. There is a class 1 employer NIC. Class 1 employer NIC should not be calculated in this case. Why? You better know the rates. You better know the rates. You remember the rates? As the salary is only 8,000, so less than the first band. Salary is only 8,000, so it is less than the first band. I hope you remember the bands. So that's why class 1 employer NIC will not be calculated. 0%, okay, for the first band. So that's why no need to calculate class 1 employer NIC. Class 1 employer NIC need not to be calculated. Otherwise, I would have calculated it. And deducted from this working. Okay, now this is your TTP, and you know the corporation tax rate is 19%. Can anybody multiply 167,000 times 19%? 167,000 times 19%. Can you do it, please? Write it on the chat box. 31730. Very good. 31730. Now use your common sense, simple common sense. Out of this 167,000, this 167,000 is basically profit before tax. This 167,000 is basically profit before tax. Out of this 167,000, we gave 31730 to government, and now simply deduct 167 minus 31730. The remaining amount will be given to owners in the form of dividends. So how much will be the dividend? Can you subtract? Yes, 135,270. 135,270. 135,270, same number. Okay, so this is the basic calculation. This is the basic calculation for you, right? They have given you ready-made dividend, but I have proved you. Yes, this is UK variant. I have proved you this thing. Okay, right? Now come to the individual side. Paul has just received salary and dividends. Paul has just received salary and dividends, salary and dividends. Okay, so now here, listen to me, salary and dividends. So as an individual, he needs to pay tax. On both. So we'll make one column of non-saving, the other column will be dividend, and we'll write these 8,000 and 135,270. The same working what we do, what personal allowance and all. But you know, as 135,270 and 8,000, if we add these two, it makes around 143 something. It makes around 143,000 something. So which is greater than 125,000. So the personal allowance will be 0. He won't be entitled to any personal allowance. I hope you remember it. I hope you remember the personal allowance thing, right? Now, listen, then you will simply calculate the tax, the individual taxes. This is the first way. So in this first route, in this first channel, we paid this corporation tax. In this first route, in this first channel, we paid this much corporation tax, and also As an individual, Paul has to pay tax on dividend and salary. Dividend and salary. So we'll make one packet. We'll make one packet and we'll add all these costs. We'll make one packet and we'll add all these costs. So this is the first option. This is the first option we have to run business as a company, to run business as a company and withdraw our profits in the form of salary and dividends. Okay, right now I'm just discussing it. Will solve you as well in front of you. Now, what is the second option? What is the second option? This is the second option, students. This is the second option. This is the second option. Please take your time and read it. Stay relaxed and read it. Now, Paul wants to know if it would be beneficial to cease trading via Paul Limited. That means no more limited company business, and instead run his business from 6th April 2020 onwards as a sole trader, individual, right? So now his tax adjusted trading profit for the year ended 5th April 2021 would remain unchanged at 175. Yes. So he can work as an individual as well. He can work as an individual as well. No more limited company. As a sole trader, he can work. And one good thing, when he's working as an individual, see this, his accounting period. His accounting period is exactly same as fiscal year. Open your eyes. 6th April 2020 to 5th April 21, the accounting period exactly matches the fiscal year. Accounting period exactly matches the fiscal year. So though there will be no more basis period calculation. There will be no more basis period calculation. Thank God. Okay. So now if he works as an individual, so trading income is a non-saving income and he needs to pay tax. He needs to pay tax, income tax on trading income on non-saving income rates. Okay. Second thing, open your eyes. Second thing, he needs to pay. Now he's an individual and he's earning trading income. So for trading income, self-employed needs to pay two types of NIC. Self-employed needs to pay. Self-employed individual needs to pay two types of NIC. One is class 2 NIC and the other is class 4 NIC. One is class 2 NIC and the other is class 4 NIC. Okay. So now in the second case, he has to pay income tax on trading income. Number two, he has to pay class 2 and class 4 NIC. Okay. So there are two options and we need to gather all the costs. We need to gather all the taxes of the two options. And then finally, we have to advise that which option is better. Okay. We have to advise that which option is better, right? Now, just giving you 30 seconds to read it and keep things in your mind. Now, what is the requirement? Let's see the requirement. This is the requirement. C. Determine whether or not, this is the requirement. C. 10 marks question. This is the first 10-mark question. Determine whether or not there will be an overall saving of tax and national insurance contribution NICs for the year ended 5th April 2021 if Palu Limited's business is instead run by Paul as a sole trader from 6th April 2020. So now, simple, you have two options. The first option is the limited company thing, which I'm going to solve. And the second option is as a sole trader. Okay. And then finally, we'll compare the cost of these two and then we'll tell the decision. Okay. There are some notes written here. You can read the notes. I'm going to. Okay, students. So now, okay. Okay, let's move to the option number one. First of all, I would like to say one thing. Is my voice and screen sharing is perfect with you? Just tell me. My voice and screen sharing and everything is perfect with you? Okay, sorry for inconvenience. Now, what was the option number one? What was the option number one? In the option number one, the trading profit was 175,000. Can you see this trading profit? The trading profit was 175,000 less. Obviously, when in the one, company is paying salary, company is paying salary of 8,000, company is paying salary of 8,000. So that salary, that remuneration is allowed expense. That salary and that remuneration is allowed expense, right? Okay, so we'll deduct that salary from here, less we'll deduct 8,000 from here. So it will be how much? 175,000 less 8,000. It will be 167,000. The TTP will be 167,000. TTP will be 167,000. Okay. Now we'll multiply the corporation tax rate on it. Corporation tax at the rate how much? It's 19%. It's 19%. So what we'll do, we'll come here. This will be 167,000 times 0.19, 167,000.19. So this will be 31730, 31730 as discussed on the previous screen, right? Okay, so now how much will be the dividends? How much will be the dividends? How much will be the dividends in this case? Dividends will be 167,000. Dividends will be 167,000 less 31730, it will be 135,270. It will be 135,270. Okay, now let's come to the individual side. Let's come to the individual side. From the individual point of view, from the individual point of view, we have a salary of 8,000 and we have a dividend of 135,270. This individual is receiving salary of 8,000 and dividend of 135,270. Now use your common sense. If you add these two, 135,270 and 8,000, if you add these two, 135,270 and 8,000, it makes 143,000 something. It makes 143,000 something, 143,000 something. So as it is greater than, as your ANI is greater than 125,000, so your personal allowance will be zero. 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 Okay, right? And when your personal allowance is zero, so your taxable income will be 8,000 for non-saving, and for dividend it's 135,270. For dividend it's 135,270. Okay, now please be very active. You all know, we all know this. When your salary when your salary is 8,000, when your salary is 8,000, so you have the first band, available for your salary. You have the first band 0 to 37,500. The first band is 37,500, so is available for salary. And what is the rate of the first band? What is the rate of the first band for salary? You remember, it's 20%. So what we'll do, we'll write, look at here, 8,000 times 20%, 8,000 times 20%, shift, this will be 1,600, this will be 1,600. Okay, now use your brain. Your first band, the capacity of your first band is 37,500. The capacity of your first band is 37,500. Out of this capacity, out of that 37,500, how much you have used? How much out of that 37,500? How much you have used? How much you have used? Tell me. You have used 8,000. So how much is left? 29,500. 29,500 is left. Okay, so now you need to compute. Now you need to calculate tax for dividend. Now you need to calculate tax on corporation tax on dividends. Okay, whenever you need to calculate tax on dividend, how much is the nil rate band? How much is the nil rate band for dividend? How much is the nil rate band for dividend? Tell me. 2,000. Yes. So what you will do, first 2,000 times 0%, first 2,000 times 0%, first 2,000 times 0% will give you 0. Okay, now tell me, your original amount was 37,500. Your first band was 37,500. You used 8,000. You use 8,000 for salary, and then you use 2,000. Then you use 2,000 for dividends. Now, how much first band is left? How much first band is left? Tell me. Yes, 27,500. 27,500 first band is left for dividend. Now, tell me. Can you tell me the first band tax rate for dividends? Can you tell me the first band tax rate for dividend? Yes, it's 7.5%. So what we'll do 27,500 times 7.5% equals this, shift. Okay, so this will be 20625. Now, can you tell me how much is your total dividends? How much is your total dividend? Your total dividend was 135,270. And how much tax you have already calculated on dividends? 2,000 NRB, and then you calculate 27,500 tax. Okay, now can you tell me how much dividends are left? How much dividends are now left? It's 105,770 dividends are left. Now this 105,770 will easily come in the second band, because you know the capacity of second band is 112,500. The capacity of second band is 112,500. Okay, so what you will do, you will write here 105,770 times the second band dividend tax rate is 32.5%. So times this. Okay, so this will be 34,375.25. Now let's add it. Now let's add this all column. So you will get this, your income tax. You will get income tax in this case, income tax for this case, right? Okay, so in the first case, when you are working as a limited company, look at here. In that case, you need to pay this much corporation tax. See, this is your corporation tax. Okay, and this is your income tax. Now, do you need to pay any NIC? No, because your salary is less than 8,000. Salary is equal to 8,000. So salaries are less than NIC's first band limit. Salaries are less than NIC's first band limit. So that's why you don't need that's why you don't need to pay any NICs. So just these two types of cost are there: income tax of 38037.5 and corporation tax of 31730. This was your first case. This was your first case. Okay, did you understand this? Please reply on the chat box. Please reply on the chat box if you got it. Please reply on the chat box if you got it. Now listen to me very carefully. The second option, what was the second option? In the second option, you can forget about the limited company. Now there is no limited company. You are working as a sole trader and you are doing business. You are working as a sole trader and you are doing business. Okay. So when you are doing business as a sole trader, your trading income will be 175,000. Your trading income will be 175,000. Now look at here, please. Your trading income will be 175,000. So trading income is a non-saving income. See, this is the tax computation. Trading income is a non-saving income, right? And as this trading income is 175,000, which is greater than 125,000. So whenever your ANI is greater than 125, your personal allowance is zero. So see, your personal allowance is zero. And when your personal allowance is zero, your taxable income will be 175,000. Now, dear student, first of all, you need to calculate income tax on it. Okay. So 175,000 is your taxable income and purely non-saving. So you remember the band's capacities. Let me write you the band's capacity. The first band capacity is 37,500. Second band is 112,500 and the third band is unlimited. First band is 37,500, second band is 112,500. You guys must know all these things now. You are no more kids, please. So let's start. Out of this 175,000, the first band, obviously 37,500 will be used completely. 37,500 times 20%. This times 20%. Okay. Then out of 175,000, if you deduct 37,500, still there will be a very big amount. Left. So complete second band will be eaten up. Complete second band will be utilized. Okay. Now, if you add first and second band, it makes 150. It makes 150,000. And your taxable income is how much? Your taxable income is 175,000. So last 25,000, for last 25,000 you need to use additional rate of tax. Okay, let's add the complete. So in this case, your income tax is 63750. 63750. Just take one minute break. 1 minute break. Wait. Okay, now, so if you are working as an individual, if you are working as an individual, so you will have a trading income of 175,000. On this trading income, you need to pay tax like this. On this trading income, you need to pay tax like this, and the tax will be 63750. Income tax will be 63750, right? Okay. Now, when you all have studied, when you are a sole trader and a businessman, you are a sole trader and a businessman, then you need to pay class 2 NIC and class 4 NIC. You need to pay class 2 NIC and class 4 NIC as well. Okay, class 2 NIC is fixed 3.05 pounds per week. 3.05 pounds per week. Look at here, class 2 NIC is fixed 3.05 pounds per week. And how many weeks are there? 52 weeks. See, so this will be 158.6. 158.6. This is very simple. Now listen to me very carefully. For class 4 NIC, all of you in the exam, these NICs rate will be given ready-made to you. These NICs rate will be given ready-made to you. These NICs rates will be given ready-made to you. Okay, now listen. You know, for the class 4 NIC, class 4 NIC is calculated on tax adjusted trading profit. Class 4 NIC is computed on tax adjusted trading profit, and you better know the rates. Listen, 0 to 9500, 0 to 9500, it's nil. For 0 to 9500, it's nil, so 0%. And then 9500 to 50,000, 9500 to 50,000, that means the capacity of second band is 40,500. The rate is 9%. The rate is 9%. Okay, so for first 50,000, this is the 2 lines calculation, but your trading profit is 175,000. Your trading profit is 175,000. Your trading profit is 175,000. Okay, your trading profit is 175,000, right? So 175,000 less 50,000 is 125,000. So the last band class 4 NIC rate is 2%. So this will be your 6145 will be 6145 will be your class 4 NIC, class 4 NIC. I'm sure you guys understand this. This is very simple thing. This is very simple thing. Okay, so when you work as a sole trader here, so your income from this business will be trading income, and on this trading income you need to pay this tax. This is the tax, and number 2, this is the class 2 NIC you have to pay, and this is the class 4 NIC you have to pay. Just 3 things. Okay, so now let's compare the two. Let's compare class 4 NIC. You must know the rates, dear students. Keep the rates of class 4 NIC with you. Keep the rates of class 4 NIC with you, please. It's 0 to 9500 nil, 9500 to 50,000 it's 9%, and then 50,000 and above it's 2%. Okay, so out of this one, this is your trading profit 175,000. Okay, so out of this 175,000, see 9,500, 40,500 and 125,000. If you want to add, just add these 3. See, as an evidence I'm doing this. If you add these 3, it will be 175. If you add these 3, it will be 175,000. It will be 175,000, right? This is how we do it. And class 2 NIC is fixed 3.05 pounds per week. 3.05 pounds per week. 3.05 pounds per week, right? Okay, so now let's compare which option gives you tax benefit, which option is cheaper for you. Now listen, look at here. In the first option, when you were running your business in the form of limited company, in the first option, when you were running your business in the form of limited company, so you had to pay corporation tax of 31730, and you had to pay income tax of 38037.75. okay, just keep this cell numbers with you. This is E11 and this is E16. E11 and E16. Let me write. See, E11 E11 and E16. Okay, so if you run the business in the form of limited company, you have to pay income tax of this, corporation tax of this, and zero NIC. No NICs in this case. No NICs in this case. So let's total it. Let's total it. Let's total it. So it will be 69. It will be 69767.5. 69767.5. Okay. And now, if you run the business in the form of sole trader, if you run the business in the form of sole trader, so you need to pay income tax of 63750. This thing, you don't need to pay any class, any income, any corporation tax. And the NICs you need to pay now, are two, and that is class 2 NIC, this one, plus wait, class 4 NIC, right? So in terms of individual, the cost is 70053.6. 70053.6. Now you tell me which option is cheaper. You tell me which option is cheaper. Which option is cheaper? Obviously, running the business in the form of company. Obviously, running the business in the form of company is very good. Running the business in the form of company is very, very good, is excellent. Running the business in the form of company is excellent. Okay. Now, so this was all about this first question. This was all about this first question, right? Okay. See this. Now what I am doing, listen, as you know, there are some students are saying there is some hanging issue because I'm using my laptop, and in my laptop there are some issues. So I'm going to connect again with my iPad, so that then things will go very smooth. Then things will go very, very smooth, very, very smooth. Okay, let me just connect it. The remaining questions we'll do using the iPad thing. Okay. And don't worry about this file. I'll share you this file. Okay. So now this is question number 2. This is going to be your question number 2. Just read it. Just read it, please. Okay, now listen. This scenario relates to two requirements. Alfred and Amia are married couple. Alfred commences trading. Alfred wait. Now listen. Alfred commenced trading as a sole trader on 1st of September 2020. This is the commencement date. Now, I have some questions. I have some questions with you. The first question: whenever somebody starts business in front of you, somebody starts business, trade, business in front of you, what things come in your mind? What things? Yes, basis period calculation. Basis period calculation comes in your mind. Basis period calculation comes in your mind whenever you see a new business. But sometimes, when even if it is the first year of accounting, even if it is the first year of business, you don't need to do basis period calculation. You don't need to do basis period calculation. When you do this, when your accounting period and fiscal year is aligned, when your accounting period and fiscal year is aligned. Let's see, I think this is the case. Open your eyes. He prepared his first set of accounts for the 7 months period ended 31st March 2021. Yes, your accounting period and fiscal year is aligned. Your accounting period and fiscal year is aligned. But don't forget, the actual number of months of your accounting period, only 7 months. Yeah, the actual number of months are only 7 months. September, October, November, December, Jan, Feb, and March. Only 7 months. The actual number of months are only 7 months. The actual number of months are only 7 months. The actual number of months are only 7 months. Okay, so when it is a 7 months accounting period, you need to apportion certain things. You need to apportion certain things. Okay, like in capital allowances, you need to apportion AIA. In capital allowances, you need to apportion AIA. You need to apportion WDAs. You need to apportion WDAs. Similarly, you need to apportion the lease premium amortization of lease premium. This is also one of the issue. So be careful in apportioning things. One more thing: you have started business on 1st September 2020. This is the date. 1st September 2020. This is the date of your beginning of business. Okay, now let's start. And his draft tax adjusted trading profit before capital allowances was 63,000. See, so this 63,000 is before calculation of capital allowance, so you need to calculate capital allowances yourself. Okay, now the draft tax adjusted trading profit is before adjusting for any deductions arising from the following. What does it mean? These next 5 points, examiner has done nothing. For next 5 points, examiner has done nothing. For next 5 points, examiner has done nothing. Okay, so these are totally those points for which examiner has done nothing. Whatever you want to do from scratch. Okay, so let's start. 5,000 incurred during January and February 2020 on a marketing campaign for his business. Point number one. Now listen, when did we start the business? I need your involvement. It should be the two-way traffic. Excellent. One student identified. When did we start business? It's 1st September 2020, and this expense incurred before the starting of business. This expense incurred before the starting of business. So this is a pre-trading expenditure. This is a pre-trading expenditure. Okay, so do you remember the pre-trading expenditure rules in trading income? Yes. Pre-trading expenditures are allowed. Pre-trading expenditures are allowed if they incurred within last 7 years, within last 7 years of the starting of business. And yes, this is within last 7 years. This is within last 7 years. So this will be allowed. So this 5,000 is totally allowed. This 5,000 is totally allowed. And just think, use your brain. As examiner has done nothing for this and this is allowed, so we need to deduct it. Examiner has not yet deducted this, so we need to deduct it. So it will be deducted. It will be deducted. Okay. Now the next, a premium of 30,000 paid on 1st September 2020 to acquire a 10-year lease on a workshop used for trade purposes. Used for trade purposes. You did this in trading income as well. You did this in trading income as well. In trading income as well. Okay. So you have acquired this property on a 10-year lease. So whenever you acquire property on lease, on lease, and you pay lease premium, so in that case, you are allowed amortization of lease premium from trading income, because you are using this property for trading purposes. You are using this property for trading purposes. So you will be allowed amortization of lease premium. Okay. But don't forget that your accounting period is only 7 months. Don't forget that your accounting period is only 7 months. Okay. So I'll do it for you. Don't worry. I'll do it for you. Some of the students have already done it. Some of the grade students have already done it. Don't worry. I'll also do it for you. I'll solve it with you. Right. Then next, cost of a golf day on 31st March for a group of Alfred's largest clients. Clients means customers. So do you think entertainment customers are allowed or not? Tell me. Not allowed. Entertainment customers not allowed. Excellent. Please be with me. Entertainment customers not allowed. So we'll do nothing for this. Because examiner has not touched any of them. Okay. Now the fourth one, expenditure of 116,000 on 1st September 2020 for plant and equipment. Yes, they have bought new plant and equipment, and yes, plant and equipment are qualified for capital allowance. Now wait, you remember what is the limit of AIA for this fiscal year? Tell me, what are the total AIA? 1 million. Okay. 1 million is the total AIA. 1 million is the total AIA allowed for 12 months. But our accounting period is how much? 7 months. Our accounting period is 7 months. So please apportion 1 million times 7 upon 12. Please apportion 1 million times 7 upon 12. This will be 583,333. So you have this much AIA available with you, and you just bought plant for only 116. You just bought plant for only 116,000. You just bought plant for only 116,000, for only 116,000. Okay, right? So this complete plant will be part of AIA, and this will totally become capital allowance. This will simply go in the allowance column, 116,000, because we have 583,333 AIA, right? So that's not a big deal. Now, next thing, the purchase of a motor car on 15th December 2020. The purchase of a motor car on 15th December 2020. The purchase of a motor car on 15th December 2020 for 24,000 pounds. The motor car has a CO2 emission rate of 84 grams per kilometer and is used by Alfred's employees. So employees private use doesn't make any difference. So it's proper business use car. And can you see the CO2 is 84. So as CO2 is more than 50 and less than 110, CO2 is more than 50 and less than 110. So this car will definitely go in main pool. This car will definitely go in main pool. Simply, right? And you will get 18% WDA. On this car. Okay. Now second thing is employment income. But let me first solve you this. Solve you this. Now there is one issue. I won't be able to solve on Excel because I have connected my device with iPad, and there is no Excel on iPad. Okay, but I have Excel solutions ready. Excel files were ready. I'll send you. Don't worry, it's not difficult thing now. Trading profit. Now listen. The first thing is trading profit before adjustment. How much was the trading profit? Now if you guys don't have the question, try to take the pick of question. What was the trading profit? It was 63,000. Now less the first thing, pre-trading expenditure was allowed. Pre-trading and marketing, pre-trading expenditure, pre-trading marketing, because it is incurred within last 7 years. I think it was 5,000. Okay, now second thing we are doing now. Wait, listen. The working for premium. Listen, let us say this is the landlord. Let me teach you with a sketch. Landlord, and this is what's the name? Alfred. We are Alfred. Alfred paid a premium of 30,000. Alfred paid a premium of 30,000 to the landlord. Okay, so now just think, as landlord is receiving premium, first let's do some working for landlord. So what will happen in the landlord books? We'll write premium received. How much? 30,000. There is a relief, less 2% into n is how much? 10. Lease term is 10 minus 1 multiplied by premium. Can you tell me how much is this? 18% of 30,000. 18% of 30,000 is how much? 5,400. Okay, now this is taxable premium for landlord. This is taxable premium for landlord, and this is, I think, 24,600. Okay, now this is taxable premium for landlord, but we are not working for landlord right now. As Alfred is using this property for business, so he will be allowed for amortization. How to calculate this amortization? You will write 24600 in the numerator, divide by 10 years. Can you calculate? This is 2460 per annum. But your accounting period is only how much? Your accounting period is 7 months. So you need to apportion it by 7/12. So how much is this? After doing apportionment, 1435. Yes. So this 1435 is the allowed expense for Alfred. This is the amortization of lease premium which is allowed for Alfred. Okay, student, do you remember this all thing? All teachers teach you in trading income chapter. In trading income chapter, we teach you this training. Now, this amortization of lease premium will go here. This is an allowed expense, so we'll deduct amortization of lease. How much is this? 1435. Okay, now the third thing, 1435, it's 1435, not 14350. Okay, now the next thing is entertaining less Entertaining customers not allowed. Entertaining customers, entertaining clients or entertaining customers not allowed. Entertaining customers not allowed. So just write dash or zero. Just write dash or zero. This is also the part of presentation. Okay, just write dash or zero. This is the part of presentation. Don't forget this thing. Now next thing is capital allowance is working. Capital allowance is working. Let's start here. Capital allowance working. Let's start here. Wait. This is main pool. Opening balance is nil. Opening balance of main pool is nil. Why the opening balance of main pool is nil? Because the business has just been started. The business just started. Okay. Now additions. What was the name? Yes, plant and equipment. Plant additions. Plant additions. Plant. It was 116,000 and complete. It will complete washed away. Complete washed away by AIA. It will be completely washed away by AIA. Okay, because we have AIA of around 58333 something, big AIA available. So it will directly go in this column. Okay, now did we buy any car? Yes, 24,000. We bought car, addition, car, 24,000. So now let's apply the format. Let's apply the format. Do you guys remember the format of main pool? Do you guys remember the format of main pool? Opening balance, add addition, less disposal. Opening balance, add addition, less disposal. Finally, the balance is 24,000. And on this balance, you will be doing WDA at the rate 18%. You will be doing WDA at the rate 18%, but don't forget your accounting period is only how many months? Your accounting period is only 7 months times 7 upon 12. Can you tell me how much is this? 2520. Thank you. And this 2520 will also go here. So now what's the total capital allowance? What's the total amount of capital allowance? 116 and 118,520 is your total capital allowance. 118,520 if I'm not wrong. 118,520. This is your total capital allowance. Take your time, please. Are you getting this? Okay. So if I'm not wrong, you all know this fact that capital allowance is also an allowed expense. It's allowed expense, so it will be deducted. Capital allowance will be deducted is 118,250. Capital allowance is 118 less capital allowance 118,250. Capital allowance is 118,250. Capital allowance is 118,250. Can you please tell me? Can you please tell me what is the net answer? Can you guys please tell me? Yes, it's 61,685 loss. 61. How much is the loss? How much is the loss, please? 61,685. 61,685. Tax adjusted trading loss. Tax adjusted trading loss 61,685. Tax adjusted trading loss 61,685. 61,685. Okay. Any problems till now? Any problems till now? Please tell me. If you have any problems, please ask. And be with me. Don't sleep. These are ending days. Don't sleep. Please don't sleep. You will do this past paper very easily. This is your past paper now. If you guys want to take picture of the past paper, you may. If you guys want to take the picture of past paper, you may. This is the past paper. Okay. Now we have just covered the trading income. We have just covered the trading income. Can this capital allowance convert the, yes, capital allowance can convert profit into loss. Why not? Why not? Sure. 100%. Now let's move to the second requirement. Let's move to the second requirement, which is employment income. Now you have 3 points for employment income. Now you have 3 points for employment income. I'll show you the working as well. Don't worry. Employment income. Now, Amaya is employed by ACCA Limited, and her remuneration packages comprises, number one, a gross salary. Yes, this gross salary will be added in employment income PNL. Now just think about employment income. Now just think about employment income. So the first thing which we add in employment income is gross salary. So you will simply add it. You will simply add this gross salary in employment income. You will simply add this gross salary in employment income. Okay. Now, second thing, from 1st January 2021, from 1st of January 2021, Argo Limited provide AMIA with a petrol-powered company motor car. Now, listen, in the employment income, when I used to teach you employment income, I used to tell you like this. There are two major things in the employment income. One is called benefits. And the other thing is called deductions. You know, after reading this point, what is this? This is benefit or deduction? Tell me, this point number 2 is benefit or deduction? Benefit. What is benefit? Which is provided by company and which is received by employee, so employee is getting it. So this is benefit. Okay. And this is a very super hit benefit, car benefit. This is a very famous super hit benefit, which we call car benefit. Listen. So from 1st January 2021, Argo Limited provided AMIA with a petrol-powered petrol car. Keep this thing, the rates are different. Motor car, the motor car had a list price of 25,000, although Argo Limited received a discount and only paid 23,500. Which amount we should take? Remember the lecture, list price before trade discount, right? So 25,000 should be used. 25,000 should be used. List price before trade discount. Okay, this was the lecture. The motor car has a CO2 emission rate of 52 grams. The motor car has a CO2 emission rate of 52 grams. Remember the rates, remember the chart. Whenever your CO2 is between 51 to 54, 51 to 54, 13%, 51 to 54, fixed 13% rate for petrol car. Fixed 13% rate for petrol car. I'm sure you know this. Argo Limited did not provide any fuel for private use. Okay, so there is no fuel benefit here. There is no fuel benefit here because until and unless you receive private fuel, no fuel benefit will arise. So in this question, only car benefit will come. Now, I have a question for all of you audience. This is all about learning. Please, this is your time investment for this class. We compute employment income for accounting period of fiscal year. Come on, tell me. We compute employment income for accounting period of fiscal year. We compute employment income for accounting period of fiscal year. Fiscal year, very good. It's fiscal year. Never say accounting period, otherwise people will submit you to hospital. Don't do this. Employment income is calculated for fiscal year. Okay, so now, and your fiscal year is, in shortcut, fiscal year is April to March. In short terms, fiscal year is April to March. And you see, you receive this car on when did you receive this car? When did you receive this car? Tell me. 1st January 21. So January, Feb, and March, only 3 months in this fiscal year. Only 3 months in this fiscal year. So you need to apportion this benefit. So in simple terms, let me tell you directly the amount. 25,000 multiplied by 13% into 3 upon 12. That's it. 25,000 times 13% into 3 upon 12. 25,000 times 13% into 3 upon 12. Right. Now, point number three. It's a very interesting dodge. Point number three is super excellent adjustment. Since 6th April 2018, Argola Limited has provided, that means provided by employer. So it's a benefit. Amaya with living accommodation, which qualifies for job related accommodation. You know, in job related accommodation, the annual value benefit is exempt and additional benefit is also exempt. If your accommodation qualifies for job related accommodation, your annual value first benefit is exempt and your second additional benefit is also exempt. So see, the next line is irrelevant. The annual value of the property is 23,000 and Argo Limited pays rent of 2,500 per month. All this line is irrelevant. It's totally exempt. This benefit is totally exempt for you. Enjoy. As this is job related accommodation, that's why this benefit is exempt. This benefit is exempt. So enjoy. Right now, Argo Limited deducted income tax as pay of 19240 from Amaya's salary during tax year 2021. Now, listen. It's easy. It needs confidence. If you have confidence, you can come over your paper. Listen. Pay does not come anywhere in any P&L. Employment income P&L, pay never comes. Pay is deducted in the end from income tax liability. In the income tax computation, in the end, we deduct pay. In the end, very end, we deduct pay. Okay. So 19240 won't come here, right? Okay. Now, so employment income in this question is just a 1 minute game. I'll calculate it for you. It's just a 1 minute game. I'll calculate it for you. Don't worry. Now, the next thing is property income. From here, you will have property income. Wait. Again, you will have some learning and one non-routine area as well. First of all, my first quiz. Can you tell me the basis? Of assessment of property income? Can you guys tell me the basis of assessment of property income? Yes, cash basis. For individuals, as we are doing individuals, the basis of assessment for property income is cash basis. Means, open your ears. Only cash receiving and paying. Only cash receipts and payments we'll take. Okay, and open your eyes now. Don't sleep. Since 6th April 2018, Amaya has let out her own house unfurnished at a rent of 1,200 per month. No worries. Amaya received 13 months rent during 2021. Now use your brain. How much? No doubt your fiscal year is 12 months. I don't have any issues with this. Your fiscal year is 12 months, but here the examiner is saying that in this 12 months fiscal year, you receive 13 months rent. So in the property income P&L, you will add 13 months. In the property income P&L, you will add 13 months rental income. Okay. So 13 months times 1,200. 13 months times 1,200, it's nothing. Now, a very non-routine area. Normally students do mistake in this. Even they send me message and they ask this question to me. Listen, Amaya has a mortgage which she took out to acquire the house. Loan to acquire the house, residential house. It's a residential house. Okay. And in the tax year 2021, she made a mortgage payments of 6,000, including interest of 2,600. Now, first of all, that means he is repaying 6,000. Out of this 6,000, out of this 6,000, 3,400 is the principal amount. Principal loan repayment is never ever expense in accounting. Even in accounting, it's not an expense. Principal loan repayment is not an expense even in accounting, so not an allowed expense. But yes, interest is allowed expense. Interest is an allowed expense, but there are some new rules for property income interest. There are some new rules for individuals property income interest expense since last 4 years. And now what are the latest rules? Open your ears. This interest expense is not allowed right now from the property income P&L. This 2,600 interest expense not allowed from property income P&L at all. Leave it from now. Leave it from the property income P&L. And in the end, during tax computation, final tax computation, you will get a 20% relief on this 2,600. You will get a basic rate tax relief on this 2,600 in the end. This is the rule. This is the new rule. Okay, I'm sure you guys know about it, but yes, it's a non-routine thing. You hardly have done 3 questions for this max. Now, don't forget, we are still on property income. In property income, only cash basis, money inflows and money outflows. Now, and keep your fiscal year in your mind. Your fiscal year 6th April 2021, 6th April 2020 to 5th April 21. 6th April 2020 to 5th April 21. Listen, on 1st December 19, Amaya paid an insurance premium of 800. This insurance premium, read the date. This insurance premium date does not lie in our fiscal year, so ignore it. For the house in respect for the year ended December 2020, then read it. Then on 1st December 2020, yes, this date lies in our fiscal year. 1st December 2020 lies in our fiscal year. She paid an insurance premium of 1,250 for the year ended 31st December 2021. For the year ended 31st of December 2021. For the year ended 31st December 2021. Okay, so only 1,250 is allowed. Only 1,250 is allowed. Okay, so I hope you understood what I taught you right now. If you want to take the pick of this, part, you may. If you want to take the pick of this part, you may, so that you'll have a question with you. This is not difficult. Students, please don't consider this question, although it's the latest past paper, but not difficult at all. You can easily clear it. You can easily clear this paper. Now, read the requirement. The first requirement, C, calculate the IFRS revised tax adjusted trading profit and loss for the 7 months period. I have already done it. With you. I have done this with you. We calculated the loss. Now the next requirement is for the lady Amaya. Calculate the income tax payable. By Amaya for the tax year 2021. Right. So now you need to calculate tax for Amaya. Let me solve it for you. I'm sure you have the question now. This was question number 2, requirement A. And now I'm moving towards question number 2. Requirement B. The first head which we are going to calculate is employment income. The first head which we are going to calculate is employment income. How much was the salary? I think the salary was 80,000. The salary was 80,000, right? Then there was a car benefit. Let me calculate directly. It was very easy. The car benefit was 25,000. times 13% times 3 upon 12. That's it. 25,000 times 13% times 3 upon 12. Can you tell me how much? 812.5. Thank you. And what about the accommodation? What about the accommodation? Tell me. It was exempt. Accommodation was exempt. So better write just 0 or dash. Okay. So can you tell me what's your total employment income? It's 80812. 80812.5. This is your total employment income. This is your total employment income. Done? Tell me. Work with confidence, please. Please stay confident, please. Thank you. Now let me do a little bit on property income. A little bit on property income. Let me solve. Property income. So first thing is receipts less payments. Receipts or income less. Receipts is how much? 13. Sorry, I think per month rent is how much? 1200 times 13. 1200 times 13 is 15,600. Thanks a lot. 15,600 less mortgage interest. No need to deduct mortgage interest because it's not allowed from here. It's allowed from somewhere else in the end. And you have insurance as well. And you have insurance. Insurance December 19 is irrelevant. Leave it. But yes, insurance paid on 1st December 2020, it's 1250. Yes, that's relevant. That's relevant. Okay. So may I know the final 14350. Thank you. Thanks a lot. 14350. Right. So these are the two simple incomes in front of you. And now, as they have told you to do, they have asked you to solve the income tax calculation for this Amaya, right? So let's start. Okay, so all of these incomes are non-saving. The employment income is how much? 80812.5. Then you have 14350. You have property income of 14350. Can you add these two? How much? 95162.5. Thank you. 95162.5. Now go relax. This is your total income. As there is no gross gifted donations, there is no gross PPC. That's why this will be your ANI. This will be your ANI. And as your ANI is less than 100,000, so your personal allowance will be 12,500. Okay. So that's your personal allowance, 12,500. What's the final taxable income? Students, tell me. It's 82,662.5. 82,662.5. It's 82,662.5, right? Now, as this income is pure non-saving income, very easy, go easy. Now listen, you have been studying for last 3-4 months. So at least the income tax computation must be on your tips. You should be very fluent in income tax computation. The band things, these things should be on one click. Honestly, it's time now. You have done many questions now. So now Your first band, as there is no extension, 37,500. Let me calculate income tax now. Computation. This will be 37,500 will be the first band at the rate 20%. How much? It's 7,500. Now just deduct 82,662.5 less 37,500. 82,662.5 less 37,500. How much is left? 45163. 45163. This is this the amount? At the rate 40%. Thank you. 18065. 18065. Okay, so you will have this. Well, how much is the total? 2,555,565. Now two things we can deduct. The first, less interest relief. Remember the 2,600 interest, it was not allowed from property income P&L. That interest, that mortgage interest was not allowed from now new rules, according to new rules, not allowed from property income P&L. So we need to get relief here on 20% basic rate relief on that interest. So 2,600 times 20% is, I think, 520. Thank you. And one more relief we'll get, and that is pay less. Pay as you earn. This is also a tax credit. This is a tax credit. Pay is 19240. 19240. So this makes your income tax payable how much? 5805. 5805 is your income tax payable. 5805 is your income tax payable. 5805 is your income tax payable. So wait, students, did you understand this? Students, did you understand this? Please reply me. Yes, I'm showing you the above working. Interest relief is, listen, what is interest relief? Now, as since years interest expenses was allowed from property income, and yes, it's a normal allowed expense, but now they are giving you relief on interest expense in a different way. They are not allowing interest expense from property income P&L. They are not allowing a single pound, a single rupee of interest expense from property income P&L. Instead, they are giving you relief in the end on the basic rate. Even if you are a higher rate taxpayer, on interest expense of property income, you will only get tax relief on basic rate, that is 20%, right? So in other words, they have reduced the relief. In other words, they have restricted your relief, right? And don't forget to study this area. See, nowadays it's coming. I've seen in some questions now. Now, the next question. Yes, in other words, it reduces our tax. Excellent. Now, the next question we are moving towards is corporation tax question. This is your corporation tax question, please. Just read it. Let's take a 5 minutes break. Okay? Let's take a 5 minutes break. Now let's start the last question of today's class. This is the last question of today's class. Need your energy input, please. Now this is about corporation tax. This is about corporation tax. Okay. So Mooncake Limited reported an operating loss of 93280 in its statement of profit and loss for the year ended 31st March 2021. For the year ended 31st March 2021. See, this is the loss. This is the loss we are talking about. See this 93820. So already there is a loss. Already there is a loss. Still some adjustments are needed. Still some adjustment are needed. Now listen, this is a routine question which you guys have done many times. Many times. See, accounting PNL is given. Accounting PNL is given, and they have already subtracted something. They have already subtracted something. So now you need, yes, you need to adjust like you used to do in your classes. You need to adjust things like you used to do in your classes. Okay. Now, this is note number one. I'll discuss everything. Don't worry. This is note number two. This is note number three. That is capital allowance. Then about something about property business loss and something like capital gains. And finally, this is the requirement. Finally, this is the requirement. This is the requirement. Okay. Calculate the moon for what is the requirement number A? Sorry. State the factors which will influence a company's choice of loss relief claims. Very easy, super hit 2 marks. Very easy, super hit 2 marks. All teacher teaches this thing in class. Listen. This is about losses. This is purely about losses. You have option to go carried forward. You have option to do current year. You have option to do carried back. All these options are available. You can take if for trading loss, I'm talking about, let us say from trading loss. For trading loss, you can do carried forward, you can do current year, you can do carried back. What thing will you do? Which option will you go for? So there are normally 3 points. Even in the individual, this thing is there. Number one, maximum tax saving. But in companies, all over the rate is 19%. In companies, normally everywhere the rate is 19%. So the tax rate is same everywhere. Okay. The second thing is timings of relief. If you do carried forward, then you will have to wait. If you carried forward your loss, you will have to wait for future. So it's better if you have current year option and carried back option. That's quicker one. If you have current year option and carried back option, then it's a quicker one. And the third point is, in the planning, try not to waste your QCDs. Try not to waste your QCD. So these are the points which are used for this planning. Okay, what are the points? Number one, let me write. Maximum tax savings. Okay, see this, these are free marks. In my lectures even I say this thing. Maximum tax savings. Number two, earliest possible relief means current year set off and carried back is beneficial. And the third point is QCD not to be wasted. These are the points. These are the cash points which you have to write, and you get the marks. See, so if somebody got failed at 40 to 48, so he or she should take this 2 marks. Free marks. To be very honest, if somebody does not know about these points till now, it's dangerous. That means he or she is going very informal. Till now, if you don't know these points, then you are going very informal. These are very, very, very general points. Okay, so these points you write and you will get the 2 marks, complete marks. No more deduction in this part. No, don't expect any deduction here. Now calculate mooncake limited. I'll send you this file, don't worry. I'll send you this file after the class. We are on the WhatsApp group now. Calculate mooncake limited tax adjusted trading loss for the year ended 31st March 2021. Wait, only you need to calculate tax adjusted trading loss. No need to compute corporation tax now. No need to compute corporation tax now. Okay, now always read these notes. Your competition should commence with operating loss figure of 93820. They are saying to start the question with 93820. They are saying to start the question with 93820, 93820, right? Okay, and should indicate the by use of 0 for any items which do not require adjustment. Okay, so let's start the question. This question is totally normal question. Only a little bit area is new in capital allowance. Something always comes new in sometimes in capital allowance. I will explain you that. Don't worry. Okay. So here is your question. 93820 is your operating loss, and this is your accounting P&L. This is your accounting P&L. Now, there are some things I always say in the class which are totally not allowed. In one look, you understand it. Depreciation. In one look, you understand this is accounting depreciation. See, 7230 is your accounting depreciation. It's not allowed, and you need to add back. You need to add back this. Okay. Now, the second thing is about leasing cost. And they are saying go to note number 1. They are referring you towards note number 1. Let's come to note number 1. Lease of office equipment 2980. This is full time allowed. Lease of office equipment, no problem. This is full time allowed. So for allowed things, we do nothing. Because already accountant has deducted it. Okay, now lease of motor car trading income chapter, trading with CO2 emission rate of 125 means CO2 is greater than 110. Lease of motor car with CO2 is greater than 110. You remember the punishment. 15% of this cost will not be allowed. 15% of this cost will not be allowed. So what you will do, you will write 3400 is the amount. 3400 times 15% is not allowed, and we add back the not allowed things. So in this whole leasing adjustment, we'll only add back 3400 times 15%. We'll only add back 3400 times 15%. That's it. Now next thing is other expenses. Let's move. Listen. Now see the dodge. Entertaining staff full-time allowed. And now see the dodge. Cost is 160 per head. No issue. It could be 200, 2000, 2 million, any amount. It's allowed. Yes. In employment income, remember the chapter. In employment income, there is a benefit which we call staff parties. Dinners. Remember dinners. So if that is greater than 150, so that will be a taxable. Okay, so they are mixing you with that employment income chapter. Right now it's normal entertainment staff and it's full-time allowed. Entertaining staff is full-time allowed, but entertaining customers not allowed. Entertaining staff is full-time allowed, but entertaining customers full-time not allowed. Okay, now entertaining Overseas customers not allowed, so we need to add back. Now again, this is the dodge. I hope, please think over it. There is one chapter which is called value added tax. There is one chapter which we call value added tax. In value added tax, yes, there is a difference between overseas customers and local customers. Overseas customers and local customers. And in value added tax, if you are entertaining overseas customers, then you can easily claim input VAT. But if you are entertaining local UK customers, you cannot claim input VAT. But in trading income chapter, students, listen, whether it is your local customers or overseas customers, no entertainment allowed, so we need to add back. Then you have qualifying charitable donations. Qualifying charitable donations are allowed from total profits of corporation tax. Qualifying charitable donations are allowed from total profits of corporation tax. They are not allowed from here. They are not allowed from trading income. So again, we'll write not allowed and we'll add back. Be careful. The balance expenditure is allowable. Okay. So just think over it. Take your time. Okay. Now, this is the only part in which one line is new. Please be with me and understand it. On 1st April 2020, the tax written down value of the main pool is 43,200. You will write main pool and the opening balance of main pool is 43,200. The opening balance of main pool is 43200, right? Now, the following vehicles were sold during the year ended 31st March 2021, but the business is going on. You didn't close the business. This is not the last year of business. This is a normal business. And yes, they sold these items. Delivery van. Yes, delivery van is a main pool item. Delivery van, everybody knows it's a main pool item. So few years back, you must have added it in the main pool. So now you will be subtracting it from the main pool. Subtracting it from the main pool. And the basic rule at the time of disposal, you remember the rule lower off. Yes. At the time of disposal, the basic rule is you deduct lower of DP and cost. You deduct lower of DP and cost. So see, out of this cost and DP, which one is lower? Which one is lower? This one is lower. Okay. This one is lower. So for van, we'll deduct 11,800. Van, we'll deduct 11,800. Now for motor car one, 8,400 and 8,100. Which one is lower? 8,100. And motor car 2, 5,300 and 12,200. Which one is lower? 5,300 is lower. Okay. So this is very simple. We have just circled the three things. But now listen. The original cost of the motor car 1 had previously been added to the main pool. Motor car 1 was previously added to the main pool. So now obviously it will be deducted from main pool. Okay. Right? Till here, it's easy. Van and motor car 1 was originally added in main pool. So they will be removed from main pool. That's logical. But now the original cost of motor car 2 qualified for 100% F first year allowance. Remember, the car with CO2 less than 50, you remember the new cars with CO2 less than 50. So in past we claim complete 100% allowance on this 12,200. Wait, this is the cost 12,200. Let me try to teach you with logic. Those students who know the logic, they will understand. We claim complete 100% of 12,200 in past. Complete 12,200 capital allowance in past, but today, listen, we bought it for 12,200 and we sold it for how much? We sold it for 5,300. So we bought it for 12,200 and sold it for 5,300. What is the real depreciation? So real depreciation is only 6,900. So for this motor car 2, our right was only 6,900, but we claimed how much? 12,200. We claimed 12,200. So now we need to return. Now we need to return the depreciation. Now we need to return 5,300 to them. Now we need to return 5,300 to them. So how we are going to return it? Open your ears. How we are going to return such cars? By simply deducting the proceeds from main pool. That's it. That's the treatment. By simply deducted the proceeds 5,300 from the main pool, so the effect will automatically come in the main pool. The effect will automatically come in the main pool. Slow. Think over it. I'll repeat it. You think over it. Delivery van and motor car 1 was originally delivery van and motor car 1 was originally belonged to main pool. So definitely we need to deduct it from main pool. That's okay. That was simple thing. You know it. Only motor car 2 is a new thing. Motor car 2 was claimed 100% in the past. Motor car 2 was claimed 100% in the past. So now, but you get the receipts in the end. You get 5,300. So definitely you should return something to government. You should return something to government because you overclaimed. You claim more depreciation in past, but the real depreciation is low. So how you gonna return it? How you gonna return it? By deducting this proceed, by deducting this balancing charge. Yes, the word balancing charge is perfect. By deducting this balancing charge from main pool. Simple. So the effect will automatically come. And one thing I would like to tell you, students, please keep a big heart with you. Even if you do, it's a new thing. Okay. If you do it wrong, 1 mark. Only 1 mark. Check the marking scheme. If you do this motor car 2 wrong, only 1 mark is deducted. What is 1 mark? You have 100 marks with you. So don't take tension. Yes, these mistakes are normal. Sometime examiner asks some new treatments. 1 mark, 2 mark, give away, charity. You can do charity. Okay. So now let's summarize it. All these three items will be deducted from main pool, and the law is lower of DPN cost. What's the law? Lower of DPN cost will be deducted. Lower of DPN cost will be deducted. Now, as a student, you may ask, sir, is there any addition? No. In this question, there are no additions. In this question, there are no additions. In this question, there are no additions, right? And again, I say, if you do motor car 2 wrong, 1 mark will be deducted. No issue. No issue. Keep a big heart. Now, next. I'm not going to read this next page because my first requirement will be done using this data. My first requirement will be done using this data. Wait. If you want to take the picture, giving you 30 seconds, you can take the picture of this first part and second part, because I'm going to move the screen. I'm going to start solving it. Take the picture if you want, so that you will have question on another screen. Yes, this one also the question, please. Take the picture if you want to. Thank you. (3B). 3A was theoretical points. I wrote at the same time. 3A was the theoretical point, 2 marks. I wrote them immediately. Now I'm going to do B part. So accounting operating loss. Accounting operating loss is how much? Accounting operating loss is 93820. Accounting operating loss. Please take interest. After 20 minutes, we'll be able to complete it. Don't worry. Only 20 minutes are left. 93820. Sorry, 93820. Now add back depreciation. Accounting depreciation you can add. (7230), right? Then you have leasing cost. Listen, lease of office equipment is allowed. Lease of office equipment is allowed, so just do nothing, write 0. But car lease 15, there is a punishment, 15% of 3400, 15% of 3400, which is 510. You need to add. I've already taught you this. Okay. Then entertaining staff is allowed. Entertaining staff is allowed, so you need to write 0. But entertaining overseas customers, entertaining overseas customers, not allowed. So we need to add back. How much is this? 8720. Then we have charitable donations, QCD also not allowed from here. So it's, I think it's 1600. Now, last but not the least, I have to solve the capital allowance. Let me solve it. I'm going to solve it for you. Here. This is main pool. And yes, this is going to be your allowance. Okay. Now, what's the opening balance of the main pool? Opening balance is 43,200. There are no additions, but yes, there are three disposals. Simply deduct the lower amount, lower of cost and DP. The first thing is van. For van, it's 11,800. Okay. For car one, lower is 8,100. Thank you. And for car 2, it's 5,300. Car 2, it's 5,300. Can you tell me how much is the balance? 18,000. Thank you. 18,000 is the balance. And now, as it is the main pool, so we'll write WDA at the rate 18%. Now just hold. Let me see. Yes, it is in the first line, it was written year ended. Year ended means total 12 months. So no need to apportion it. It will be 3240. This 3240 will come here. So finally, this is going to be your capital allowance. This is going to be your capital allowance 3240. This is going to be your capital allowances 3240. Okay. Take your time. Now, so this capital allowance is allowed expense. So let's deduct less capital allowance three two four zero. Okay. So can you tell me what is the final amount of loss? What is the final amount of loss? Yes, if the final amount is negative, one question students are asking. What if your final amount is negative in any pool? If your final balance is negative, immediately take it to the allowance column. immediately take it to the allowance column with the negative sign. Yes, this is the rule. Can you tell me the number, students? Can you calculate the net amount? 79,000 is the loss. 79,000 is the loss. 79,000 is your tax adjusted trading loss. Tax adjusted trading loss. Tax adjusted trading loss. 79,000 is the tax adjusted trading loss. 79,000 is the tax adjusted trading loss. Okay. 79,000 is the tax adjusted trading loss. Your first requirement done. Did you understand this? Now this is for the year ended 31st March 21. Only 15-20 minutes with full energy. This is for the year ended 31st March 21. Now, can you guys just predict, just think over it, involve it. We are doing companies, not individuals. We are doing companies. How to use this trading loss? What are the options? Please write on the chat box. What are the options to utilize this trading loss for the year ended 31st March 2021? Tell me. What are the options? Current year, carry back. Yes, you can do current period and last 12 months as well. You can do current period total profits, not TTP. Trading loss can set off current year total profits and last 12 months total profits. Very good. And yes, carried forward option is also available. Carried forward option is also available. Excellent, 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 excellent. Now, just current year total profits and last 12 months total profits. Yes, 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 yes. Before QCD, okay, before QCD. Now let's move to the second part with more active brain. Now, Mooncake Limited has a property business loss of 4,400 for the year, same year. In the year, listen, in the year in which we have trading loss, we just calculated the trading loss. The same year we have property loss as well. No more property income as well. So I don't see any income in this year. I don't see any income in this year. Now, this property loss cannot be carried back, but yes, property loss can be used in current year and carried forward. Property loss can be used against total profits of current period and future total profits. Okay, this is company's property loss, current period and carried forward. Okay, no more carried back in property loss. Now, for the disposal of shares, very easy peasy, very easy peasy. Listen, Mooncake Limited made a profit. Mooncake Limited made a profit on disposal of shares of 3,700 in respect of 1% shareholding, which was sold on 8th November 2020. Yes, this is our accounting period. See the date. Our accounting period disposal. Okay. The profit on disposal is calculated as disposal proceeds. See, DP 34,200 less cost is open your eyes, 30,500. Very easy thing. So unindexed gain. We are doing companies, not individuals. Unindexed gain will be how much? Unindexed gain will be, can you calculate? 3,700. Yes. Now they are saying the indexation allowance is 6,700. Indexation allowance is 6,700 for companies. There is no annual exemption. For companies, there is no annual exemption, only indexation allowance. Now, let me shout it. Indexation allowance cannot create or increase loss. Indexation allowance cannot create or increase loss. So if I deduct 6,700 from here, I will get a negative answer. If I deduct 6,700 from here, I will get a negative answer. So I can't make my gain negative because of indexation allowance. So what we'll do, we'll just restrict it to 3,700 and we'll make it 0. So in the current year, open your eyes, please. In the current year, we don't have any gains as well. Gain is also 0. Our final gain is also 0. So Trading income is negative. Trading, there is no positive trading income we have in this year. Property income is also negative. Property income is also negative, and gain is zero. So I must say, in your current year, your all incomes are zero, either losses or zero. No more positive income. There will be no total profits. There will be no total profits in this question. Not getting. For the year ended 31st March 2021, dear students, you have trading income negative, property income negative, and capital gains zero. So you can't, you have total profits as well, zero. Your total profits are zero. Your total profits are zero. Okay. Now, very interesting data. Examiner has given you last year data. Please, just, I need a little energy, and then we'll end the question. So results for the year ended 31st March 2020, last year. Our question belonged to 2021. Our question accounting period belonged to 2021, and this date is 31st of March 2020. This date is 31st of March last year. See, in the last year, we have trading profit, we have property business income, we have capital loss, and we have QCD. All these things are available last year. Now, hold, don't run. When you have trading profit, a positive trading profit, when you have a positive trading profit and property business income, so automatically you have total profits last year. Automatically you have a positive total profits last year. Yes. So your current year trading loss can be carried back. Your current year trading loss can be carried back easily against the last year total profits. Yes. Now, one very interesting thing. Last year you have a, see this, I need to emphasize on this. Last year you have a capital loss of 4,900. Last year you have a capital loss of 4,900. Use your brain. Capital loss can only set off capital gains. Capital loss can only be used against capital gains. Do you have any capital gains? Do you have any capital gains last year? No, you don't have any capital gains last year. So this 4,900 is unused last year, and this will be carried forward. This 4,900 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 will be carried forward in the current year against current year capital gains. But unfortunately, in current year, the capital gain is again zero. So it will keep going on. It will carry it forward again. You're not getting. You have a capital loss of 4,900 in last year. So you can't use that capital loss last year, because capital loss is only set off against capital gains. So last year there is no capital gain. So you will carry it forward. You can carry it forward to current year. But again, in the current year, again, there is no capital gain. In the current year, again, there is no capital gain. So it will keep on going, carried forward again. 4,900 capital loss, don't forget. Yes, you can use this last year QCD because you have total profits. You have these total profits with you. You have these total profits with you. So you can use last year QCDs. But one unlucky thing. In the current year, you also have 1,600 QCD. You solve with me. In the current year, you remember the trading income part. In the current year, you also have 1,600 QCD. That will be wasted because the current year total profit is zero. Current year total profit is zero. So the current year QCD will be wasted. Current year QCD will be wasted. Current year QCD will be wasted. Okay. So now I'm going to solve it now. Please, I have repeated it. I've tried my best. I've tried my best. Okay. I pray that you guys got it. Let's read the requirement. Let's read the requirement, please. This is the requirement. This is the calculate the company's corporation tax liabilities for the year to 31st March 20 and 21. Last year as well as current year. Last year as well as current year, simple tax rate is 19%. Simple tax rate is 19%. Current year, there will be no tax. Current year, there will be no tax, but still I'll show you the working. And then calculate the amount of unused losses or payments which Mooncake Limited can carry forward to be utilized in the year ended 31st March 2022. Very good. How much amount can you carry forward? How much amount can you carry forward next year? How much amount can you carry forward next year? How much amount can you carry forward next year? Okay, let's solve it. Let's solve it. Let me make the pro forma for you. And I'm sure you have taken the pick of the question. Year ended 31st March 20, and this is year ended 31st March 21. Requirement C. Wait, let me start with trading income. The trading income here last year is 138,200. This year is 0. You know, instead of loss, we write dash. Instead of loss, we write dash. You know this thing? Now, the property income last year, the last year property income was 23,700. And the current year, there is a property loss. Current year, there is a property loss. We just did in the question. So we'll write dash. And capital gains, simply dash and dash here, because there was a capital loss. There was a capital loss last year, but capital loss cannot set off other incomes. Capital loss cannot set off other incomes. Capital loss can only set off capital gains. So no utilization of capital loss. So can anybody tell me the total profits? Can anybody tell me the total profits? Last year is 138,200 plus 23. How much? Total profit, please. 161,900. Thanks a lot. And here you will have total profit of 0. So now you remember the carried back relief, trading loss, carried back. How much? You remember 79,000. This loss can come here. This loss can come here, 79,000. Okay. Now, what is the amount left? What is the amount left after this? After this, how much is the amount? Eight two nine double zero. 82900. Now you have one QCD as well. QCD as well. Last year, I think 1400. Can you tell me what is the TTP? What is the TTP? 81,500. And what is the tax rate? It's flat 19% tax rate. Flat 19% tax rate. So your corporation tax last year will be 15485. Okay. And nothing here. QCD is wasted. No QCD. So this year your TTP is 0. So first of all, you solve requirement number C. You just state requirement number C. Okay. And yes, you need to calculate capital gains here. I've already solved in the question, but let me solve it for you. Working capital gain. Working DP was in the capital gain. DP was how much? DP was 34200 less cost was 30500 unindexed gain is 3,700 less indexation allowance restricted to the same amount, so to get 0. And in the end, you will write one statement here. Indexation allowance cannot create loss. 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 Okay, now the last requirement. What losses you can carry forward? What losses, what things you can carry forward in future? Losses, requirement D. Wait. Losses to be carried forward for the year ended 31st March 22. Okay, wait. The first name, trading loss. No, you can't. Trading loss, you can't, because already used. Trading loss already used. Trading loss you have already carried back. Number 2, property loss. Yes, property loss. I think it was 4,400. 4,400. Yes, you can. Yes, you can carry it forward. Yes, you can carry it forward. Number 3, capital loss. Number 3, capital loss, which was coming from last year. Capital loss was 4,900. Yes, you can carry it forward. Yes, you can carry it forward. Capital loss as well. There is no time limit. And number 4, QCD, it's already wasted. QCD wasted means cannot be carried forward. Means cannot be carried forward. Okay, so that's the answer of your requirement D. That's the answer of your requirement D. That's the answer of your requirement D. Okay, so did you understand? Did you understand all these things? Let me show you the last part. Let me show you the last slides as well. See this. Sorry. See this thing. Okay. This thing. Now I will, you stay connected on WhatsApp with me. Stay connected on WhatsApp. I'll send you these slides. I'll send you these slides, as well as I'll send you the Excel working. I will send you the Excel working of this all as well. And I'll send you the differences between individuals and companies. I've made written some differences of individuals and companies. Plus, I've already recorded 5 webinars in the previous attempt, 5 webinars, very good revision sessions. So if you guys want to see, I'll send you the links of that as well. Link of that as well. Okay, so these all things will be available to you. So stay connected and take care. I'll send you all. Thank you. Take care.